Welcome back to Markets Today. I'm your host, Mbithe Mwema. Today is Wednesday, the middle of the week. It's not too much happening on the NSC, but we are having an ongoing conversation here on Markets Today on Cytonn. Last week, we had an analyst come and speak to us about money market managers, and there was a bit of a back and forth in as far as what is happening to Cytonn. Cytonn has been in the limelight because, based on one reason or another, with the latest public uproar coming from the fact that the Capital Markets Authority has taken or is potentially taking this company to court based on some investors who've said they've been unable to recover their initial investments. Now, we've had a perspective from somebody who has been looking at Cytonn since 2017, where he says that he had flagged some issues as red flags to the people who were listening to him. That conversation happened last week, and you can be able to find it on our YouTube page. That's Metropole TV. Just look for Markets Today, an interview on Cytonn. Today, we're having our second part conversation following up on Cytonn, just to understand what is Cytonn. What are the products? What does it mean when you invest in product A versus product B? And is there a point of caution for you as an investor as you are engaging with this company? We have the privilege of hosting Mr. Michael Obaga, who is a senior financial advisor working with Cytonn. Welcome to the show, Michael.
Thank you, Mbithe.
I know everybody wants to hear all about Cytonn, but before I get into the cracks of Cytonn, we must first start by looking at the industry. Maybe you can give us an overview of what is currently happening with the returns, the money market industry, and are there any new regulations that have been passed that could possibly change the way the industry operates?
Thank you, Mbithe. Yeah, we have there's been publishing of new guidelines by the regulator, that is Capital Markets Authority. The industry has been doing well, only that COVID clearly obliterated most of these gains made in the financial sector, and so has it affected also the money markets. We saw investors rushing to sell off their stocks at the Nairobi Securities Exchange in panic sell-offs, running towards safe havens, perceived safe havens such as money markets, government securities, and even trading in precious metals. So by any stretch of imagination, indeed, the industry has been doing well prior to COVID. But after COVID happened, we saw that investor sentiments went down a little bit, especially when you're looking from the equities markets. However, money markets have been the biggest beneficiary during this period of COVID.
Okay.
And currently, going by the favorable liquidity we're seeing in the markets currently, we've seen that investor sentiments are growing. We saw there's been oversubscription of the treasury bills and government securities in general. And the reduction in the interbank lending rates,
yes,
from 3.3% to 2.1%.
That's
a clear
low
indication that
yes,
indeed liquidity is growing,
yes,
and therefore banks are likely to lend more to the borrowers. And when banks lend more, therefore it means that individuals are going to spend more, and one man's spending is another man's earning. Yes. Therefore the economy is likely to improve.
Okay. Yeah. Or possibly the borrower could just end up being the government of Kenya. We have seen it dominate this space, and especially given the uncertainty in the markets.
But all in all, whether government borrows or consumer borrows, at the end of the day, it's going to have an effect on the GDP.
Yes.
Because at the end of the day, there has to be spending.
Okay.
Yeah.
Fair enough. When you say that there have been some new changes to the money market regulations from the Capital Markets Authority, kindly elaborate on this.
Yeah, we saw a few weeks back, we saw the regulator come up with new guidelines that are going to govern the collective investment schemes. And we saw indeed it was a step in the right direction. And therefore, we really appreciate the fact that indeed the regulator has seen that there is need for more stringent regulations that is going to guide the collective investment schemes on matters surrounding valuation, reporting, and even performance of these particular funds. And therefore, it can only be a step in the right direction by any stretch of imagination. And we've seen that this one is all these new guidelines are tailored towards improving the industry by making sure there is standardization in the sector, and as well as consistency amongst all the fund managers or players in this industry.
Okay.
Yeah.
Fantastic. Thank you so much for that overview. Now let's look at Cytonn Asset Managers.
Yeah.
Cytonn has been in the press. There has been a lot of back and forth. But before we get into what the press has said, what are some of the issues we have seen there? Start us off by introducing Cytonn to us. Who is Cytonn and what are the products that Cytonn offers to the market?
Now, Cytonn is an alternative investment manager.
Okay.
And by and large, we are also an asset manager. Therefore, Cytonn is an investment management firm that has two arms. We do have an asset management firm or a subsidiary that deals with asset management that clearly has products that are regulated by Capital Markets Authority, and the mainly collective investment schemes that include unit trust products and also specialized collective investment schemes such as the Cytonn High Yield Fund.
Okay.
And we also have the pension department still under the Cytonn Asset Managers that is going to deal with pension products, and our pension products are mainly segregated pension funds. Okay. And other than that, we also have an unregulated arm, and this is the arm that is going to offer what we call private offers, the structured products that are real estate backed, and these most of these investments are majorly funds which are real estate backed, and they are structured in the sense that they do have characteristics of both the public markets and the private markets. Okay. Therefore, these are the funds which are not understood by the public, and it's largely attributed by structuring is a new phenomenon in Kenya. Okay. And structuring sometimes is complex to understand. Okay. And therefore it's a new concept. Therefore you do understand what goes around new concepts, because structuring means innovation. Innovation means disruption, and disruption means resistance. Okay. Therefore, by the fact that you're able to derive superior returns from the underlying asset, which is investment grade real estate, we are able to pass it down to the individuals who are the investors, and therefore we are able to sustain the returns you're giving to the investor. And therefore this one has really rubbed many people the wrong way, especially those who don't understand the process of structuring, and those who don't understand that indeed there is what we call illiquidity premium in real estate. That is the excess return you're able to get as an individual or an investor by investing in an illiquid asset compared to a similar investment in a liquid asset. Okay. Yeah. So when I walk into Cytonn today as Mbithe, now give me the products that I'm getting under the different arms, because you said there's the asset manager that's regulated. What products am I getting there? And then what are the other products that I'm getting from the business that does the structured products? Thank you. That is a good question, Mbithe. Now, when you walk into the Cytonn door and you are welcomed by a financial advisor, the financial advisor is going to take you through the products that are regulated, as well as the products which are not regulated by capital markets. Okay. Now, Cytonn Asset Management is offering you investment products which are regulated by two regulators. Capital Markets Authority, that is going to regulate the collective investment schemes we have, which are mainly unit trust product, that is the Cytonn Money Market Fund, the Cytonn Balance Fund, and the Cytonn Equity Fund. Okay. However, we also do have a specialized collective investment scheme that is called the Cytonn High Yield Fund. Okay. And the Cytonn High Yield Fund majorly invests 80% of the funds in real estate and 20% in the public markets. And therefore, the Cytonn High Yield Fund has been able to afford investors return of up to 14% per annum. Okay. However, it's important to understand that you can be able to liquidate your principal and interest starting from the third month. That is, we have a lock-in period of 3 months when you're going to invest in the Cytonn High Yield Fund. Okay, so today I walk in and you'll sell me either a money market fund which invests primarily in government debt, or you can sell me the equity fund which has exposure to NSC equities, that's shares, or you can sell me the balance fund which has exposure to both of them, or the high yield fund. Precisely. So the high yield fund, is this under the purview of the Capital Markets Authority, or is it only the other three? Precisely. Now all these products I've just mentioned, that is the Cytonn Money Market Fund, the Cytonn Balance Fund, the Cytonn Equity Fund, and the Cytonn High Yield Fund, which is a specialized collective investment scheme, are all regulated by Capital Markets Authority.
Okay.
However, we also have pension products that are regulated by the Retirement Benefit Scheme.
Okay, and this is still under Cytonn Asset Management. All right.
Yeah.
Okay.
And then we do have unregulated products.
Before we get to the unregulated,
Yeah.
walk us through the pension products.
Yeah, now the pension products we give are generally segregated funds, and you are aware that segregated funds have been able to outperform, guaranteed funds for a long period of time. And that's why you're saying Cytonn, as an investment firm, you're venturing into segregated fund management on pensions. And our target return is between 11 to 15%. And it's a clear indication that you are able not to guarantee you any return the way, insurance-backed pension funds are able to guarantee you 4%, but you're saying, look, we're not guaranteeing you any percentage because you are a segregated fund, but we are able to give you, a target return of between 11% to 15%. Therefore, by any stretch of imagination, by any thinking, you're going to get a superior return more than someone who has invested his pension in a guaranteed fund, which is insurance-backed.
And that's 5%.
That is 5%.
Okay.
Yeah.
What's the cumulative size of now the assets under management by Cytonn Asset Managers?
Now, to be particular on these on the different funds we have currently, these are liquid products, going by the fact that collective investment schemes are, schemes that offer products which are liquid, and therefore we are looking at a figure which is near 1 billion, because we had hit 800 million worth of funds in the Cytonn Money Market Fund. The Cytonn Pension Fund is approaching 100 million, because it's relatively new. And all these other funds.
What about the high yield fund?
The high yield fund, it's relatively newer. Remember, you got a license to operate a high yield fund late last year.
Okay.
And we are looking at a figure of around 300 million.
All right.
Yeah.
And what about the balanced fund and the equity?
Now, the balanced fund and the Cytonn equity fund are all below 100 million in terms of the assets under management.
Okay,
yeah.
Fantastic. Then now let's go to the other side of the business. That's the business that's focused on structuring deals and being innovative, and then offering this as investment opportunities.
Yeah.
What's the name? What's the umbrella name for this particular?
Now, they're called structured products.
Okay.
In the sense that we're able to get these products through a process called structuring. Structured finance is new in Kenya, but again, it's common in other jurisdictions such as South Africa. You're looking at, the US, Europe, and that's where we've been getting these concepts from, because clearly the first world is evolving very fast in terms of the financial products and investments. But here in Kenya, they're not common products. And you're saying, look, instead of you investing primarily in the public markets, you can be able to invest in the private markets or the alternative markets and be able to get a superior return, which is way above what you can get in the public markets.
Yes.
Because we do understand that alternative markets have been able to outperform public markets in return for the longest period of time. And this is attributed by the fact that alternative markets, investments in the alternative markets, are basically players in the private market. And by that fact, it means that the valuations in the private markets are not easily affected by economic downturns or crises such as COVID-19 in terms of valuations. Number two, they are able to give you a downturn protection. They're able to give you an inflation hedge against the effects of inflation. At the same time, they're going to give you what we call an illiquidity premium. That is the excess return an investor is likely to get when he's going to invest in an illiquid asset compared to a similar investment in a liquid investment, maybe in the public markets.
Okay. So for the structured finance, how many products are there? Can you
now, for structured finance, we only have two. That is the Cytonn project note by the Cytonn High Yield Solution. But again, remember, these are privately offered products.
Okay, that's what
Therefore,
I wanted to get to.
we don't have the capacity to sell these products in the public.
Okay.
And therefore, we are not going to dwell on maybe the characteristic, but I'll be able to say that they are able to give superior returns because the underlying asset, which is real estate, and real estate is stable and it's an appreciating asset, is able to derive superior returns. We're looking at a cash-on-cash return, which is above, a double-digit cash-on-cash return, above 20%, and therefore it means if at all you're going to afford the client any return below that, therefore it shows that the model is sustainable.
Okay.
Yeah.
And if you're not able to share without infringing on your proprietary rights,
Yeah.
do you have a sense of the assets under management and under the structured product segment of Cytonn?
Now, it's huge because remember, this is our signature fund, and most of these funds, began way back 7 years.
Okay.
Cytonn is 7 years old, and sometimes people don't really understand. They say that Cytonn is less than 5 years. No, we are 7 years, and we've been able to offer these products for the longest period of time, and the funds is well in a tune of billions.
Okay, so is it double the size of the funds that are under regulation, or is it triple the size?
It's a double-digit
Double.
in
So
terms of
maybe
billions.
2 billion.
No, it's way above.
Yeah.
Yeah,
3
it's a
billion?
double-digit figure.
Double-digit figure.
Yeah.
Okay, fair enough. So you have 2 products under this, and they're more or less funded by the real estate.
No, they're not funded by real estate.
No, they
real
are-
estate informs the underlying asset,
Yes.
but they're funded by investors.
They're funded by
Because
investors.
these are-
So it's investors who want exposure to real estate, but they don't want necessarily to buy the apartment, so they buy a unit
Exactly.
in this product.
Yeah.
Okay, fantastic. So for 7 years, if you have been building the real estate, and these are the projects that Cytonn has, maybe you can give us an update of where these projects are. Are there any projects that are 7 years old? What's the success rate for the projects, and what's the value of the real estate projects?
The success story of Cytonn's real estate project is very good in terms of exiting the projects. Remember, we've done exclusive gated communities in Karen, and the reason why we've gone into Karen is because Karen is the paragon of the suburban life in Kenya. That is where who and who is. We have the largest concentration of international schools in Karen, and going by the fact that real estate is about location, location, and location, therefore the nearer you are to a source, the higher your property value, and therefore the higher or the best business opportunity you're going to afford your investors. Therefore, when you look at the capital appreciation we have in Karen, when you look at the rental yield we have in Karen, is pretty remarkable, and we are looking at returns, business opportunity of up to 25%, and that one is going to give you a clear exit strategy within less than 5 years.
Okay.
Therefore, we've been able to exit from the Amara region, Karen, whereby we are doing exclusive gated community of villas, and a villa was going for $1 million, and we are able to execute. We sold to the owners and we exited the project, and as a result of the
So that's
oversubscription,
100% already completed.
exit, people are living there.
Okay.
Yeah. So as a result of the oversubscription from the investors who wanted to buy into this project, and the critique in terms of improving this particular project, we were able to start phase 2 in a place called Miotoni at the core of Karen, and we've been able to continue doing these sales, and it's now like a phase 2 of the same project.
Okay.
Still within Karen.
And that's the high end, that's the premium
A
projects.
deluxe villa is going for 170 million.
Okay.
And a standard villa is going for 135 million Kenya shillings.
So how many units were there for Amara?
For Amara, we are doing 10 units.
And then for Miotoni?
Miotoni, we are doing 18 units.
18 units.
Yeah.
Have this already all been sold out, or are you at the pre-sales?
Now, our concept for, real estate being an illiquid investment,
Yes.
generally, because it's considered to be a bit lengthy to execute, it's a bit, expensive to transact, and complex to understand sometimes. Therefore, we ventured into ways in which you're going to inject more liquidity in the funds by going directly into the projects and doing what you call off-plan sales, so that you can have liquidity getting injected into these projects that is going to support these funds, which are real estate backed. At the same time, we are able to execute to the owners again. Having 40 to 20% pre-sales is another indication of indeed the project is viable. Therefore, that is the reason why we mostly get into these projects pre-sales, and we also do that in order to inject more liquidity into the funds.
Okay.
Yeah.
Fantastic. What about the other projects which are not necessarily high-end? How are those doing?
Now, we also have projects in Ruaka. One that is the Alma Project in Ruaka. We also have another one in Ridgeways, that is the Ridge, and we also have another one in Ruiru. And the reason why we are developing Ruaka, somebody can ask, why is Cytonn a high-end real estate company developing in Ruaka? What have you seen in Ruaka? And the answer is simple. Out of the top 10 fastest growing towns in Kenya, we have 6 of them in Kiambu, and Ruaka happens to be one of them, and Ruiru. So by any imagination as an individual, remember Ruaka is giving you the best demographics in terms of occupancy levels. At no one point you can get an apartment in Ruaka having less than 80% occupancy level.
Okay.
Therefore, that's a good sign.
So what's the status of this project today?
Now, we do phases, like I told you. So the project is worth 5 billion. We've already exited the first phase of the project.
How many units were this? I think I've seen it as I'm driving.
Yeah, 113 units were handed over last year.
Okay.
And we had the Minister for Housing there. We had the former, Prime Minister.
When you sorry to interrupt, when you say handed over, so was your role as a developer? Or what was your role? Who did you hand over the units
to? The owners who are staying there, who are living there currently as we speak.
Okay.
Therefore, the projects are done. And I wish some of the people are criticizing Cytonn about, the projects. They take some time, they visit these sites, they see for themselves what kind of, product you're delivering in Ruaka, because you're bringing, the Dubai architecture in Kenya, and you can clearly replicate whatever you've done in Ruaka across all countries in the African continent. So, and therefore, we are giving a comprehensive lifestyle, whereby you're developing, these developments in Ruaka. You're doing phases so that you can be able to manage, the funds we have in a sound manner, because, managing other people's funds in a sound way is one of the best characteristic of a good fund manager. And we've been able to hand over these units to the owners, and we're handing over phase 2. By the end of next month. All right.
So phase 1, please remind me, how many houses are in phase 1?
113.
113. And what about phase 2?
Phase 2, we are talking about around 420 units.
So the people who've bought the houses are separate from the people who've invested in the structured products.
Exactly.
Okay. So structured products provided funding for you as an institution to deploy this. Yeah. And then your hope was, as you're selling, you're able then to pay back.
It's not actually our hope, it's actually what is happening, because the fund is still working well, and the model is sustaining itself, because the fundamentals are supportive of the model. So we are able to source funds from individual investors who want to invest in real estate, but they don't have sufficient capital to engage in the brick and mortar, but they want to enjoy the returns that are able to be derived from real estate, asset class real estate. Therefore, it's a real estate syndication, in the sense that we are able to pull investors' funds through a special purpose vehicle, and this special purpose vehicle is the investment, and you're able to do asset allocation. You're able to do asset allocation of these funds in the underlying asset, which happens not to be real estate, but investment grade real estate. And you're talking about well-researched, because we have boots on the ground. We have a department that does research and deal origination, that is able to say that indeed Ruaka has the best rental yield and capital appreciation. Therefore, we can be able to do a project in Ruaka. Okay, fantastic. So 113 units have cost 5 billion, right? Or is 5 billion for the entire? Is the entire worth of the project. Okay. Yeah. And then outside of Karen and Ruaka, are there other key projects that? Sure, because at the end of the day, we want investors. We need to mitigate against what you call a reinvestment risk, and by doing so, we are able to do a litany of projects, not all at once, but by phasing. Therefore, you're able to do a project at a time, and once we exit from one phase, we get into a second phase. Once we complete one project, we're able to get into another project. Therefore, there are no projects which are stalled, but what you're doing, we are doing phasing. Therefore, we have to do Ruaka, we complete the Alma in Ruaka, and then we get into the other development that is in Ridgeways. All right, fantastic. So I like that you're breaking it down, and you're saying there's a part of the institution that is regulated, then there's some products that are not regulated. Privately offered. So
how do you decide who gets to see what? If I walk in, will you show? I'm imagining if I'm talking to a sales agent, they'll flag everything. And of course, if I'm a rational human being, I'll go for something that's high end, and perhaps it's not under the regulation in terms of the purview of the CMA. How do you allocate these funds?
These structured products are not regulated by the regulator, but again, they're offered within the guidelines offered by the regulator. Therefore, the provision of these guidelines, that is, the regulation, that is Regulation 21 of the Capital Markets Authority on, public offers, listing and disclosures, clearly stipulates how a private offer should be done. And therefore, we do have a pre-qualification of who is going to invest in these structured products and how to go about it. And, if maybe I need to touch on that, is someone who can be qualified into these, investing into these products must be a high net worth a high net worth individual, an individual who's sophisticated in matters finance and investment, an individual who really understands how real estate operates.
How
and
do you determine that, Michael? Did you determine that by looking at me? How would you know that?
You can, no, actually you are able to take there are a litany of questions you normally take a client through. And therefore you can ask questions that, have you ever invested in real estate? Do you understand the illiquidity?
You have a pre-qualification
process. We have
process.
a pre-qualification process before we get an investor to invest. And we clearly explain to the investor that indeed you're getting into a structured product, and this a private offer, therefore is not subject to regulation, but at the same time, there is a pre-qualification process you have to take a client through, because at the end of the day, you have to be a high net worth individual
to be able to
invest in these particular products.
So these structured products, they're not regulated. Who decides what happens?
Now,
how's the governance structure?
The governance structure of these structured products is that, for the regulated products, we do have, the regulator, whose basically his role is to check on, to do checks and balances. We also have, the custodian and the trustee. But fair enough, for the structured products, we do have a custodian. We don't have a trustee. But now the role of the trustee has been taken up by the Investment Advisory Board, whose role is to do the checks and balances. And the Investment Advisory Board is made up of individuals who are investors in the fund and have been elected during an AGM of the fund by the individual investors in the fund.
That sounds like a circle, an investment circle.
Basically.
So why would you not have a trustee, given the sums that you're dealing with, given the complexity of the products that you're dealing with?
Structured products are basically investments which are done in the alternative investments. And alternative investments basically play in the private markets. Therefore, sometimes, the regulator has no jurisdiction over these private market transactions. However, we do have an investment advisory board, like I said. We also have the partnership deed, and we also have a partnership deed that is going to guide on how investors who are going to be investors are going to engage. Therefore, it's a legal contract. However, it's only that it's offered in the private market. It's a privately offered product, which is not regulated.
Okay, fair enough. So I hear where you're coming from. Then now I come to the regulatory perspective when you're looking at this. Because then last month or a few weeks ago, we did see a couple of investors who had invested sums of between $1 million, I think the highest we saw was 25 million. So why are they saying that they're going through a process of delayed
payments? First of all, Mbithe, it's very unfortunate that the public got to know about the names and even the figures of those individuals who had invested in these funds, because these individuals, they were seeking, inquiry from the regulator on a very, basic point of it in terms of how is the fund manager not able, maybe to pay me during my maturity date, only because they didn't understand by then what the fund manager was up to and what the Investment Advisory Board, of course, in consultation with all the other investors, were doing when they came up with this restructuring process. Because clearly COVID-19 is a black swan event that has clearly obliterated most of the gains made in the, in the money markets, the financial markets, and also real estate being a player in the economy was not spared either. Therefore, By any stretch of imagination, you can't say that Cytonn is operating in a vacuum. And
no, but you're telling me you've sold your Ruaka apartments.
Yeah, that was last year when we handed over, but you're still doing it, and everything is okay. But clearly, COVID-19 has had an effect on all sectors, hands down. That one you have to agree. And what is happening? Real estate being an illiquid asset. That one we have to agree that real estate is not a liquid asset, is an illiquid asset, because it's lengthy to execute, is expensive to transact, and is also complex, to understand sometimes. That's why we have investors who are saying they're not going to engage in brick and mortar, but they want to engage in a fund that is going to give them the returns of real estate. So what happened is that the fund manager, of course, in consultation with the investors through the Investment Advisory Board, held a series of meetings, and they came up with this, a policy that in order to mitigate against the enduring effects of COVID, in order to protect the value of the fund during this time of COVID, it's only fair. It's only in line with the best practice to extend the maturities you're going to have during this time of COVID so that they can be pushed forward, and then we can be able to help, preserve value of the fund during this COVID-19. Clearly, we saw government did the same when we're talking about treasury bills. They approached investors, the corporate investors, and they told them, look, COVID has happened. Has COVID affected, the underlying asset? Yeah, sure it has. Therefore, we are requesting you to consider extending your tenors for to go to a long tenor, so that you can be able to survive the fund or the securities during this period of COVID-19. On the other hand,
but let me just interject on that. I hear you on the government, but for the government, it was an option.
It was an option.
It was an option. You either rolled over your 1 year into a 6 year, or if you didn't want, you just got your money back.
Yeah.
But from these proceedings that have come into the public realm, the investors are saying it was not an option, it was a communication of you will not get your money at this point, you have to wait it out.
No, there are actually 3 options.
Yes.
The first option is to extend for a period of 12 months so that you can be able to help the fund preserve value during this time of COVID. Option 2 was to get into real estate. You can be given an option, either you can take a unit, so that clearly, because the funds are not somewhere sitting in a bank account, the funds are actually in the underlying asset, which is real estate, and you're talking about projects which are observable, which are stable and appreciating, and you can actually go and see for yourself. So we had an option of taking up a unit, and number 3, we had an option of getting into a standstill agreement for 2 years, after which you can be able to get it, your return, at a higher fee compared to the interest that you have. We gave them all these options, and we conducted a series of Zoom meetings on a daily basis for a period of, I think, a month, in order to engage the investors and see the best way out. And we gave them these options. It's only that a few investors who didn't have the information by then are the ones actually who raised these issues with the regulator.
Okay, so
but now they've come to understand these issues, and actually the fund is operating well.
So they have now gone to the regulator, then the regulator...
No, that was a long time ago when they didn't understand what was happening, but during which we were still conducting meetings with individual investors and explaining to them what you're likely to do in order to preserve the value of the fund during this time of COVID. Because the easiest thing, Bithe, could have been us, assuming that nothing has happened, and we bury our head in the sand and we say there's blood on the streets, but you're going to pay you anyway. And that one could have had, severe ramifications of the fund. But in order to, protect and preserve value of the fund, clearly during this time of COVID, we've seen government did it. We've seen, large cap stocks
government
counters.
Gave an option of you can take your
money. So we did. We gave 3 options.
But you gave an option of take a house, wait for 2 years.
Yeah, because that's where the money is. Honestly, Cytonn, you're not magicians. What you do is you collect funds from individuals, investors. We put these funds in high-yielding, rare opportunities in real estate, and the developments are existing, so that you can be able to derive the returns. So these superior returns we give on the real estate-backed papers is not out of the blue moon.
Okay, fair enough.
So what you do, you have to do asset allocation in high-yielding real estate developments, which are investment grade, and therefore we are able to derive returns which are very superior in terms of the cash-on-cash returns, and therefore we give the individual a return, because it's basically a product in the loan market, and therefore you're able to keep something.
So you give investors 3 options to sort of engage with you.
Exactly.
So then you're saying some of these investors didn't like any of those options?
No, all investors chose an option.
Then they went to the capital markets, because now there's the issue of between the capital markets and Cytonn. What's the issue there?
Now, there's no issue with the Capital Markets Authority and Cytonn Investments. We have no issue. That's
so
why.
Is it Cytonn Invest? Because now there are 2 entities here.
Maybe
There's
the
Cytonn
brand.
Asset Management.
Yeah, that's what I'm saying. It's not a brand issue. We have no brand issue. It's actually the extension or the restructuring is in line with the best practice, and it was, done in order to mitigate against the enduring effect and the risk posed by COVID-19.
Okay.
The same way we had large cap counters in the stock market say, look, we've had COVID, therefore you're not going to pay you the dividends this year. However, you're going to give you a bonus issue.
Michael, what's the issue between you and the capital markets?
So there's no issue between Cytonn and the capital markets.
So the capital markets is
the
not
only
taking
thing happened,
Cytonn to court.
Because no, it's actually not capital markets that took Cytonn to court.
Yes,
it's actually one of the investors.
Yes.
One of the investors who went to court to seek legal interpretation, and not on the structured products, but on a product called the Cytonn High Yield Fund, which is a specialized collective investment scheme. And the issue was actually asset allocation, whereby we wanted to, there was a bit of changes from the regulator, wanted us to implement some changes. However, the investors saw if we implement these changes, it's going to affect the overall investment strategy of the fund. Therefore, they went to court to seek statute interpretation, which is well provided for in law and in the Constitution.
So what you're saying is Cytonn is okay with its investors, Cytonn is okay with the Capital Markets Authority, and Cytonn is okay. So there's no problem at Cytonn.
There's no problem at Cytonn.
Okay, so then why are people aggravated?
People are making noise on social media. Actually, most of them are not even investors. It's good you go there, and sometimes you take some time, you look at the individuals, and actually you ask them, have you invested in Cytonn? Yeah, we do understand there's been some restructuring on the real estate-backed products. We do understand, indeed, Cytonn is making all that it can. It's doing whatever which is within its powers in order to protect the value of the fund during COVID-19. The same way, large cap counters, for example, I don't want to mention them, maybe to mention Nation
No,
Media.
it's okay. I understand.
They went forward and they say, this year you're not paying any dividend.
We have run out of time. Michael, I hear you. We've run out of time.
But the bottom line is, nobody pays when blood is on the street.
Fair enough.
So in order to preserve value of the fund,
Michael,
you need to restructure.
If you're going to restructure, so you're saying that you're okay with the capital markets, you're okay with your investors.
Precisely.
So are you saying to anybody watching, if they've invested, whether in the structured products or in the asset management products, they can walk in today, ask for their money and get their money back? Or are you saying that they can walk in and then they can start to have a negotiation with you on when would be a good time to get
Actually,
money?
investors who have invested in the Cytonn collective investment scheme, such as the Cytonn Money Market Fund, can dial star 809# and withdraw right now, or even top up right now.
Finance?
For the structured products, for those who invested in the structured products, as a result of the mitigation to extend the maturities, it clearly shows for those who took the option of extending until June next year, for those when their maturity is going to fall due by then, it clearly shows that indeed they have to wait until the extension period is over. However, that one doesn't mean that the client is not going to be getting interest payment. Remember, coupon payment goes on as usual. It's only that there was a restructuring. The same way CBK told investors who had taken loans.
Give people money. CBK
no, it's the same way.
People the
regulator said,
fair enough. So you're saying,
just let me if I have to say this, the regulator, the bank's regulator say, that is CBK, that those who have loans, they can be able to walk into the bank and talk to the relationship manager and restructure. So is the real estate backed product at Cytonn. They are loan market products, because you're basically borrowing from the client, and therefore you're telling them, yeah, we do appreciate the fact that we've borrowed from you, but look, COVID has affected us and has really affected the underlying asset, but clearly give us time so that you can be able to execute and pay you on a later date.
Okay, I hope we can have you back again. We still have a few questions coming in through our social media platforms. But I think from what you're saying, the structured finance is possibly 80-90% of the total fund. And that's where the majority of the investors are, because you're saying it's double-digit billions.
Yeah, precisely, because this is the signature fund that you began with.
So that's the one that
7 years ago.
If you are part of this structured finance fund, which is about 80-90%, that's where really the point of delay in terms of the funds coming through.
However, again, to clarify, it's not all the fund that was the maturity was extended or the restructuring was done. It's only for those investors who had invested before COVID, because asset allocation by that time
that's everyone.
Was
that's
done.
everyone, Michael.
But we still have investors who invested after COVID.
Okay.
Therefore, we've divided the book, and the restructuring only affects investors who had invested before COVID. And it's in line with the best practice.
Okay, Michael, we need to have you back here again. So about 80-90% of the total assets under management by Cytonn are part of what is being contested by the investors, and there is a delay in one way or the other, depending on...
Nothing being contested. It's actually a restructuring.
There is a delay. No, listen, Michael, you're saying that this is a double-digit fund, which means it's over 10 billion, but then your collective investment fund is $1 billion or less, because your money market fund is 800 million, your high yield fund is 300 million. That's 1.1.
Those are approximate figures.
Exactly, but you have said that your structured finance product, which is the high yielding product, is over
because you're majorly an alternative investment manager.
And then you have said, based on this, on COVID, you've actually had to restructure, so there are delays. So that's what I'm trying to say, that
we extended
the people
maturities,
who can be able to collect their money immediately are part of the less than 20% of the total assets under management.
Those who have invested in the collective investment schemes.
Exactly. So can you leave us with a parting word to any investor who might not be aggravated but might see the social media platforms and get aggravated?
Social media is a very powerful tool. And we've seen there's a lot of negative sentiments and misinformation for those people who don't really understand what Cytonn does, especially on the alternative investments. Therefore, nothing is there to worry about. Actually, the extension or the restructuring of the maturities of the real estate-backed products is in line with the best practice in order to mitigate and preserve value of the fund during this time of COVID. Clearly, COVID has affected all sectors. And therefore, in line with the best practice, we have to do this in order to protect the value of the fund.
All right.
Welcome.
Okay, fantastic. That was Michael Obaga, who is a senior financial advisor at Cytonn Asset Management, breaking down the nature of the products as for you to be able to understand. We hope to have him back again here soon, because it seems that there are many questions to ask. We would be happy to front your questions on your behalf. That's all from us today at Markets Today. My name is Bitha Mwema. We hope to see you again tomorrow, same time. Good day.